Tax planning and management refer to the processes and schemes by which taxpayers arrange their affairs and businesses to attract the lowest possible tax rates under applicable tax laws. It involves optimization of marginal tax rates using devices and tools such as trust arrangements, corporations, charitable entities, deductible expenses, tax exemptions, capitalization of profits, residency rules, and profit-shifting arrangements. However, taxpayers are obliged to maintain minimum ethical standards and observe the limits set under applicable tax legislation in Nigeria. MSMEs, micro, small, and medium enterprises, refer to businesses with limited capital and resources, typically having fewer than 250 employees and an annual turnover of less than 500 million naira in Nigeria. MSMEs play a vital role in the Nigerian economy, contributing significantly to employment generation, income generation, and poverty reduction. The Nigerian government has implemented various policies and programs to support MSMEs, such as tax incentives, access to finance, and technical assistance. MSMEs can also benefit from tax planning strategies to minimize their tax liability and maximize their after-tax profits. Tax planning is the process of managing your finances and business operations in a way that minimizes your tax liability while maximizing your after-tax profits. It involves reviewing your financial situation, analyzing the tax implications of your business decisions, and taking steps to reduce your tax burden legally. The goal of tax planning is to optimize your tax situation and ensure that you're taking advantage of all available tax-saving opportunities. Tax planning involves various strategies, such as timing your expenses, taking advantage of tax deductions and credits, choosing the right business structure, and using tax-advantaged retirement accounts. Tax planning is an ongoing process that requires regular review and adjustment to ensure that you're always taking advantage of the latest tax laws and regulations. The Supreme Court of Nigeria, in the case of G. M. Akinseet Syndicate v. Senior Inspector of Taxes, ACUR, has recognized that it is lawful for a person to use means to avoid tax. However, it is not lawful to try to evade tax. This approach by Nigerian courts towards tax planning and management is consistent with Lord Clyde's famous statement in the English case of Ayrshire Pullman Motor Services v. IRC3, Ayrshire. Lord Clyde had noted that while the Inland Revenue is entitled to take every advantage open to it under the taxing statutes to deplete the taxpayer's pocket, taxpayers are also entitled to prevent, so far as they can, the depletion of their means by the Inland Revenue. The Nigerian courts have also followed the decision of the English court in the Duke of Westminster v. CIR4, Duke of Westminster, case. In this case, Lord Tomlin made a famous pronouncement that every person is entitled to order their affairs in such a way that the tax attaching under the appropriate acts is less than it would be if they had not done so. This statement has become known as the Holy Grail of tax avoidance. The Nigerian government has implemented various policies and programs to support MSMEs, such as the National MSMEs Development Plan, the MSME Development Fund, the National Enterprise Development Program, the Agricultural Credit Support Scheme, the National Collateral Registry, the National Information Technology Development Agency, NITDA, Innovation and Entrepreneurship Program, and the UWIN Connect program. The National MSMEs Development Plan is a comprehensive plan developed by the Nigerian government to provide a framework for the development and growth of MSMEs in the country. The plan includes various initiatives aimed at addressing the challenges facing MSMEs, such as access to finance, infrastructure, technology, and markets. The MSME Development Fund was established by the Central Bank of Nigeria, CBN, to provide low-interest loans and grants to MSMEs in the country. The fund is administered through participating financial institutions and other funding sources. The National Enterprise Development Program is aimed at promoting entrepreneurship and enterprise development in Nigeria. It includes various initiatives, such as the establishment of business incubation centers, entrepreneurship training, and mentoring programs. The Agricultural Credit Support Scheme provides funding to MSMEs in the agricultural sector to enhance productivity and boost food security in the country. The National Collateral Registry was established by the CBN to improve access to finance for MSMEs by allowing them to use movable assets as collateral for loans. The National Information Technology Development Agency, NITDA, Innovation and Entrepreneurship Program is aimed at supporting MSMEs in the technology sector by providing funding, training, and other forms of support. The UWIN Connect program provides funding and training to young entrepreneurs to help them start and grow their businesses. In summary, the Nigerian courts allow tax planning and management that does not involve tax evasion. Taxpayers are entitled to prevent the depletion of their means by the inland revenue by using lawful means to avoid tax. This approach is consistent with the decisions of the English courts in the Ayrshire and Duke of Westminster cases. It is crucial for individuals to seek professional guidance from tax experts to receive personalized advice relevant to their unique circumstances. This statement serves as a disclaimer to remind the audience that the information presented should not be taken as official advice. Instead, it is a general overview of a topic from the perspective of Olatunji Abdulrazak, and it is up to the audience to interpret and use the information accordingly. Thank you.